Welcome to your closing bell on The Till. The Till is truth in lending and in life, brought to you by yours truly, Kevin Recher. Today we're going to go through some of the daily wrap-up of mortgage insurance and real estate news for November 18th. I'm Kevin Recher. Today's headline spotlight: some shifts in the mortgage market, price cuts in new homes, and the latest in real estate trends. So let's go. So, mortgage rates. Today's big news: rates dipped ever so slightly to the lowest level since early October, touching 6.26%. If you're out there and you want to compare interest rates, you can hit this button on my website and get live interest rate quotes fairly quickly, and you can price that out against any of the competitors across the nation. So just click on that. It'll take you to a live rating engine, and it costs you nothing to be an informed consumer. Lower rates mean better affordability both for buyers and homeowners considering purchasing or refinancing, especially if your current rate is above today's national average. Remember though, rates are tied to long-term treasuries, not just what the Federal Reserve when they cut short-term rates. So when you look at the 10-year treasury, it's actually bumped up to above 4.11 when we were at 3.99 just a couple of weeks ago. So if you're thinking about refinancing, use a loan calculator or check out my website. Next, let's get into that Fed watch, right? The Fed is expected to meet on 12/10, their last meeting of the year. And the markets are predicting a 50-50 chance of a rate cut in December and basically a 50-50 in January. So what's that all mean? One of the things it does mean is that the builders are having a little bit of trouble with inventory. Home builders are making aggressive price cuts. Record number of slashing prices and offering incentives like rate buydowns, upgrades. Despite these moves, buyers remain a bit hesitant about their job security, rising costs, and if you're in the market on a construction home, it could be a great time to negotiate upgrades incentives with builders. Here's the thing. If you're looking in the Northern Virginia area, I actually have an agent that's gone to every single builder site in the 3 counties around D.C. and a lot of the Vienna new construction builders, and he's got videos he can actually send to you, and you can walk through these and not actually have to travel to the individual sites. He's got a YouTube channel. Get you set up. You can view all of these properties from the convenience of your own home. So it's pretty exciting that he does it that way. Next, let's talk about market trends. Over half of the properties in the U.S. have shed some value over the past year. And that 53% of the homes are losing value in the past year as of October, according to Zillow estimate and the Z estimate that everyone looks at, right? So while that is prevalent, that 50% is doing that, it's modest. It's not a huge amount, but it is something to pay close attention to. Next, we're going to get into Redfin, right? So Redfin home prices nationally versus what that last article said, year over year are still up 1.4% year over year and 1.2% month over month. So the market's not exactly booming. Flat sales and listings means buyers can negotiate discounts. The typical sales price closed 1.5% below the final asking price, the biggest October markdown in years. So that is news when it comes to that part of the market. The other thing is the Trump administration is actively evaluating portable mortgages. So on Press News Now and CNN, there was both articles there where they talk about how you would be able to potentially, in concept, move a 3% mortgage on a $400,000 house to another home. If you were buying that, and if it was 450, you would have to come up with the 50K difference, either via second or with cash. And that would free up some of these homes that are in this lock-in effect and allow people to move. But here's the thing, it's in process, and with mortgage-backed securities, these mortgages are in big pools, and they'd have to figure out how to be able to unlock one here and unlock one there. And I really don't see that it is probably going to happen, but if it was going to happen on anything, it would have to only be on like Fannie Freddie products. Keep in mind, FHA and VA are already assumable, and they're extremely hard to do. They sometimes take up to 6 months, and they're not as easily done. So I could just imagine that doing this on conventional could be just as difficult. The next thing, again, price cuts on new construction mount as home builder sentiment remains low, Realtor.com. Weekly mortgage rate demand has slowed. Even with lower interest rates, refinances are making up 50% of the mortgage activity. So buyers themselves are wary on the market, and the industry watchers expect rates to kind of fluctuate in a range between the high fives and mid 6.5s for next year. So other things, mortgage delinquencies, third quarter inch up and are on the rise. So none of that is super fantastic news when it comes to the market. So before we finish this market update, one thing I want to talk about is if you think that you're in the market to actually buy a house in the next 1 month, 2 months, 12 months, what I want you to do as a professional tip, before you talk to a mortgage guy, before you talk to a real estate agent, I want you to go to FreddieMac.com, type in budget worksheet, and I want you to use this for at least 2 months. Use this tool. Go through the salary, your income, and then it'll ask you your housing costs, your utilities, transportation, health, food and entertainment. For a lot of young people, this is one of their expensive categories. Child care, debt, all these miscellaneous items, and it's going to come up with a summary, and you can download that completed worksheet and actually analyze where you're spending the money. How you do this is you get your bank statements, and you actually go through those, and you run through each and every one of these categories. You can even use AI and plug this in and say, I want you to consolidate this and give me a breakdown of my housing, my entertainment, and all of these areas. But I want you to do this at least for 2 months before you decide on buying a house. I want you to analyze what your actual housing costs are. I want you to analyze how much you're saving. This will give you your runway for your ability to get a mortgage and maybe have that mortgage be higher than what your current costs are. The other thing you need to be able to visualize and have a concept of is the tax benefits of owning a home. You need to be able to figure out from a interest perspective and a tax perspective what your overall deductions are going to be versus what your current tax deductions are. So as an example, if you're currently single and only being able to have a single deduction, but now your deduction is going to be $35,000, and that is, $15,000 more than what you currently have. Get about a third of that off your taxes, and that would equate to $5,000 more additional income you could bring home and still break even at the end of the tax year. So working with a budget and then finding a tax calculator and understanding the benefits of owning a home are crucial, and understanding that, yes, if you go a little bit above on a mortgage payment, that in the end, it might be equivalent to what you're doing with the rent currently. So that is your pre-work to actually buying a home. My name's Kevin Recher. I'm the owner of First Meridian Mortgage. This was an episode of The Till, Truth in Lending and in Life with Kevin Recher. Talk to you soon.